Hey, MCE crew, Palantir's stock-based compensation model is the talk of the town. But for this compensation model, the company would actually be profitable. Now, in this video, we're going to talk about why it is actually essential that Palantir have this type of compensation plan. There are a variety of reasons, some of which are going to be contained in this article. We'll talk about a very important one that's not in the article, but is patently obvious. And let's get into that first. Palantir is incentivizing its employees with stock. And what do you think that makes that employee feel like when they get that? Of course, it makes them feel like an owner of the company. So now they've got a vested interest in seeing this company really prosper and do well. Can you imagine if you'd been working for Amazon and were given shares of that company way back when, I forget who wrote the article, but there was an article that said Amazon.bomb. Some, smart ass reporter who hasn't taken any risk to start a business, produce a product or provide a service. They try to be real cheeky and write this article about why Amazon was not going to really make it because they had a bad quarter. I think this is back in 2010, if I remember correctly. I'll put the article up on the screen so you can see it. But we all know how that turned out. So can you imagine if you were an employee of Amazon back then and Jeff Bezos had given you shares of the company so that they could act as an incentive for you to really help see that the company was successful. Now look at you, all right? Amazon is trading, let's see, what is Amazon trading at? I do not own Amazon, so I really don't keep track of it. I used to. What are they trading at these days? $3,400. In fact, $3,478 to be exact. And if we go all the way back to when Amazon was a little bitty baby and just got started, can you imagine if Jeff Bezos gave you shares of that company when it was trading for $1.73 on May 16th of 1997? Wow. So that's what's going on here with Palantir in part. They are making these employees vested, interested owners. Okay, let's get into a little bit more of it. So in the first half of 2020, Palantir distributed 181,955 shares to employees. In the first half of 2021, this first number was for 2020. In the first half of 2021, they distributed 426,473 shares. So a huge leap in the amount of shares that they ended up giving out. Now, it turns out that if they had not done that, Palantir would actually be profitable right now. They'd be showing a profit. So after all that, all those share distributions, Palantir would therefore be quite profitable without its unconventional stock-based compensation. That is, first of all, quite good news because it means that Palantir's business model is profitable. I mean, it is a success. We do have that caveat in there with regard to the share distributions. Palantir would then also have risen much more strongly, risen in terms of the stock price. The operating profit in the first half of 2021 would be $233 million and thus almost 20 times as much as the first half of 2020, which was 12.6 million. Okay, so feel that, absorb that. Excluding the stock-based compensation scheme, the gross margin would have been 81% in 2020, 10 percentage points higher than in 2019. And with that, we have jumped over a pretty big hurdle for sensible investment decisions. In the long run, only investments in profitable companies are profitable. So Palantir, but for this stock-based compensation plan, would be doing quite well. Now, so you might say, well, hey, look, why are they doing it to that extent then? Well, one of the reasons has to do with what I already explained in terms of getting these employees to really be owners of the company. Okay. You've heard the old adage that, people who buy a home versus people who rent a home, there's a difference in how they keep the home, or people who own their own car or rent a car. When's the last time you washed a rental car before you bought it back, right? When's the last time you put premium gasoline in a rental car before you bought it back? Okay, so there's a different little paradigm there. Now, the other reason that Palantir pays their employees so generously with the stock has to do with the type of employee they have. Let's continue here. Had a little technical difficulty, but we're back. All right, so let's talk about that type of employee that Palantir is bringing on. We face intense competition for qualified personnel, especially engineering personnel in major U.S. markets, where a large portion of our personnel are based. This is Palantir talking, as well as in other non-U.S. markets where we expect to expand our non-U.S. operations. We incur costs related to attracting, relocating, and retaining qualified personnel in these highly competitive markets, including leasing real estate in prime areas in these locations. So they're trying to attract employees. And think about that now with respect to the good people over at Amazon who work very hard every day in their warehouses. My brother drives a truck for Amazon. He's a contractor, but he works on behalf of Amazon. They work hard, okay? It's not an easy job. Palantir's people are being attracted due to a special kind of brain power in dealing with these software applications that the company produces. So where with Amazon, you don't have to relocate warehouse employees. These are jobs that you're going to be able to find a qualified pool of individuals to work those jobs in any area you put a warehouse in. Okay, it's like we always talk about on the channel. Compensation in a capitalist society is based on the ability of someone to do a thing that is relatively a rare skill. So Michael Jordan, Kobe Bryant, rest his soul, they got paid lots of money in advertisements and by the NBA because they demonstrated a skill that not too many human beings could do. Amazon hires their warehouse workers, and there are a lot of people who can do that job. Palantir, on the other hand, is dealing with the type of software applications that the world has really never seen before. So there are not that many people out there who understand this. And on top of that, we are in an environment where artificial intelligence is starting to be, a hot topic, a hot commodity. And not just Palantir is hiring for that skill. The federal government needs people to work on that. And some people say, look, I'm going to forego compensation monetarily, right now anyway, to go work for the government because either I have a great love for my country or I know that after I finish working for them, I have a hell of a credential on my resume and I can go turn that into dollars down the road. Okay, so Palantir is competing globally for the most part. Now, there will be some situations that cause Palantir's employee base to be even smaller than most corporations out there. Because remember, Palantir, you're not coming anywhere near a lot of Palantir's client base unless you have a security clearance. DOD, DHS, NSA, Space Force, U.S. Army. You're not going to be working with any sensitive information for those organizations or with those organizations unless you have a security clearance. So that really, again, that shrinks an already small pool. So Palantir has to go out there and they have to really, dangle a carrot that's pretty attractive in order to get people to come over there and work with them. You got Tesla in AI. You got Microsoft working on AI. These are some pretty attractive companies. You've even got Amazon doing some things with AI, because don't forget, Amazon has a hell of a cloud business. So the stock-based compensation is going into attracting that special kind of employee with that special talent for software. And they have to be able to get a clearance with the United States government and with other governments as well. Palantir works with a lot of the allies to the United States. So that's what we're dealing with. Further, many companies with which we compete, and this is still Palantir talking, for qualified personnel have greater resources than we have. So they're saying, hey, we're in this pool fighting for our lives to get these employees, and we're fighting against larger corporations that can, dangle a big basket of incentives on their own. So when you look at Palantir, you're looking at that young man or young woman who's going to say, you know what, I'm going to take a chance at this. This could be the next Amazon. This could be the next Tesla that I'm going to work for. I'm going to get in here on the ground floor, bust my butt and really get paid and probably move up the chain as well. And then when Palantir becomes more of a household name, you'll also have these people in high demand for other corporations. And you will also see people coming out of this company starting their own companies with even newer technologies, okay? Like we saw that came out of that PayPal mafia with Peter Thiel and Elon Musk and others. All right, so closing down here. And here we see that the crucial point for me, the author of the article, and I will link to this, Palantir's stock-based compensation is a commercial decision. It is not to harm shareholders. If it helps accelerate the company's growth, then that's okay from my point of view. I agree with that. It is based on the same decision why Jeff Bezos never wanted to pay a dividend. Palantir can stop its compensation scheme to increase profitability. And then what? What do shareholders get out of that? The tax authorities might get something out of it, but not the shareholders. I, therefore, don't think that the stock-based compensation plan is a bad thing. In addition, Palantir can also afford its stock-based compensation, as the balance sheet is excellent. We went over their debt in a previous video. The debt ratio, measured in terms of interest-bearing debt, is only 8%. The company is also sitting on $2.3 billion in cash and cash equivalents. So the other video that we went over talked about how with that amount of money in their current spend, they could make it 9 years without ever seeing another dime. And we know that they will see much, much more money because they're getting new contracts and they're getting contracts renewed all the time. Overall, the crucial thing for me, the author of this article, which I will link to as always, is that the business becomes more profitable on the merits. And that is the case as we have seen above. In particular, the 20-fold increase in adjusted profit clearly shows that. In addition, Palantir is only in the process of scaling its software and cloud-based businesses. Now, let me close by saying with software-based business, you're dealing in intellectual capital. So the margins are going to be a little better because you don't have to go out and invest in the type of capital equipment that, say, an Amazon has to invest in with warehouses and all types of conveyor belt machinery and tractor trailers and on and on and on. Okay, so that's another key advantage to most software companies, especially if they're well run. All right, so another Palantir video, Doom Charlotte. I hope you're out there and we can count on him saying in the comments, Palantir to the moon. I agree. If you got questions, comments, views of your own on this company, let's hear it in the comments. I'll talk to you soon.